today's session is going to be loaded. You can see the lineup of speakers that we have. You don't want anybody that is your friend to miss out on any bit of this particular conference. So do well to send them an invitation right now. They should sign up. It's absolutely free and they should join in. So right now, I want to know those that are with me. You could make use of the chat box, type in your name and where you're watching from, so that I can know that I am not alone. So that I know that you're with me and I know that you can hear me loud and clear. So I want to know where you are joining in from. Okay, beautiful. I want to know where you're joining in from, and I would love to say hi right before we kick off the event in full speed. As soon as we're going now, we're moving straight up to where we are headed. Like, we want to show you how to build wealth through passive investing. And you can see that it's going to touch around why it is very important for you to have passive investment, why you should have your portfolio built up, why it should be diversified, why you should have strategies against risks, why you should start right now, because time is like your greatest asset. Right after you have your money putting in there, your diversification, your strategies, you want to also harness. Oh, okay. Thank you, Chidera. I can see that I can see your message. All right. So I'm just going to check out those that I have here. We have Kennedy, we have Aminu, we have Kavri, we have Edwin, we have George, we have Kay, we have a lot of you joining in. I'm super, super glad to have you right here with me spending your holiday, because I hope your holiday has also been great, because this is like a very beautiful weekend, a long weekend for that matter. We're celebrating a new week. We're celebrating the independence. You can see that I'm already dressed up to celebrate the independence as well. So I also, okay, yes, don't worry, Gabriel, you can actually I can see that you are here, and I know that you're with me as well. So do well to just sit tight and invite someone to join the session. That's the only thing I want you to do right now. We're going to be starting shortly, but I want you to invite as many people as possible. Send them the link to register to join into the call, right? And also tell them like why it is important for them to join, because there's nothing like watching or listening to the session live. You'll be able to ask your questions in real time. If they decide to watch the replay, they would not be able to ask questions in real time. So please do well to get more people to join. I can see Sam, I can see Samuel, I can see Sunday. Thank you so, so much for joining in and for being on time as well. So it's a very, very beautiful to have you here with me. So for some of you that may not have taking notes, we're talking about building wealth through passive investing. So I know that a couple of us would know that there's investing, there's active investing, there's passive investing, but today I want to show you how to build wealth. Like, how exactly would you get to that financial state that you've always dreamt about? How exactly are you going to build wealth? How exactly are you going to get to that point where you necessarily might not have to work? What are those things that you want to put in place? What are those things that you want to do? So we're going to be discussing about all of these in detail today. Like, we're dotting all of the I's and crossing all of the T's in investing. And the beautiful thing is that this particular session has been powered by Trove. And if we all know Trove, we know that Trove has helped us to democratize investing. They've made it very easy and accessible for everybody and anybody to be able to invest. You want to invest in international stocks, you come to Trove. You want to invest in local Nigerian stocks, you come to Trove. So you're right about at the right place at the right time right now. So we would be, like I mentioned earlier, we would also be looking about how to diversify your portfolio. It's not enough for you to invest, but there's a path for you to also have a well-diversified portfolio. We're talking about that. We'll also be talking about risk to an extent, whereby we're talking about strategies for you to manage your risks and for you to sort of gain stability in wherever you are currently with your finances. We'll also be talking about mutual funds, ETFs, different asset classes that you want to get acquainted with, and as well as letting you know why it's important for you to start right now, like start immediately, because time is one of the greatest assets that everybody has. And the sooner you start investing, the better you get to enjoy the power of compounding. We'll also be having different tips that you can practically start using going forward. So before we go ahead to the conversation, we have our speakers. We would like to bring on the CEO of Trove Finance in person of Mr. Oluwatomi Sholanke. And before he comes on, I would be reading his bio very, very quickly so that you can know who is going to be speaking. So Mr. Oluwatomi Sholanke is a technology entrepreneur with vast experience in working in, okay. Oh, beautiful. Thank you so much. All right, so I want us to use the question box. Before we bring on Mr. Sholanke, I want us to use the question box to tell me where exactly you are watching in from. I want to know where you're watching from. I want to know where you're tuning in from, so that we can connect better with you and we can also work with you better. So if you're listening, you can hear me loud and clear. You can actually type in through the question box where you're watching from, right? So we have Kennedy from Lagos, Nigeria. Thank you so much, Kennedy, for joining in. We have Wayne Jones from Cyprus. Thank you so much for tuning in. We have Sunday. Okay. We have Sunday from Benue State. We have Julius from Abuja. We have Toludayo from Imo State. We have Precious from Nigeria, right? And we have Collins from Ondo. We have Ramuta from Abuja. We have Moderator from Lagos. We have a lot of people from Lagos, and this is really, really nice and different parts of Nigeria. We have Samson from Ekiti. We have Sam from Bomosho. We have Chidera from Lagos. Yeah, we have Tengod from Abuja. We have Moses from Ogun State. Oh, this is a very, very vast audience. We have Uju from Lagos. We have Ifeoluwa from Nigeria, Gospel from Abuja, Ruby from Spain. We have Loveline from Enugu. Thank you so much for joining in. And if you joined while I already did like a brief intro, please do well to invite one of your friends. Do well to send them the link to register to join the session, because it's going to be packed. It is going to be very, very packed. So you can also post on social media, do a screenshot and post on social media with the hashtag Multiplier Conference with Trove and Passive Investing with Trove, so that more people can know about the event. Please do well to make a post on your story, post on your feed with this hashtag, so that people can know that, okay, there's an event that's going to show you how to build wealth. There's an event that's going to open your eyes as to how you're going to be making more money in 10, 20, 30 years time. The hashtag is Multiplier, hashtag Multiplier Conference with Trove, hashtag Passive Investing way with Trove. So you want to go ahead and make your post right now, and you can also let us know that you are done. Yes. So we have hashtag Multiplier Conference with Trove, hashtag Passive Investing way with Trove. So do well to make that post right now, because you don't want to be distracted when the event begins fully. You don't want to be wondering, okay, am I supposed to be making a post, or am I supposed to be listening? And yes, I almost forgot to mention that you want to get yourself a pen and a paper. Absolutely important for you to get yourself a pen and a paper, because you'll be taking down notes about things that are going to be very practical for you, and you can go ahead to make more research, and you can go ahead to start investing. So I have a few more comments to read here. Oh, thank you all so much for those of us that mentioned where they're tuning in from. Remember that the hashtag to make a post on social media to invite your friends, your families, your audience is hashtag multiplier conference with Trove and hashtag passive investing way with Trove. So I also want to set the tone for this event. I know that for us to be here, for a few of us to be here, but especially those that came in right on time, there's something that you thought about, you want to take home from this session. Do you mind sharing it in the Q&A box, because we don't have a chat box? What you want to take away from this session, what you're hoping to learn from this session, what are those things that you want more light to be shed on? Because for you to be here, you're interested in investing for sure. You're interested in building wealth for sure. So can you share with me what you want to take home from this session? What is that thing that you really, really want to learn? What is that thing that you want more light to be shed on, right? Okay, so someone just mentioned that they cannot hear me. So I want to confirm that everyone that is here right now can hear me. Please, am I audible?
You are.
Okay, thank you so much. So anonymous attendee, please, can you please just check through your device? You might want to log off and come back in, or check that your sound is connected. There's the speaker sound button that's on your screen. You want to click on it and check, or go out and come back in. Thank you. So yeah, I'm waiting for your comments on what's that thing that you want to take away from this session. You want to share with me, so that we have like a tone, we have like the expectations already set for this particular session. So something you can actually use the chat box, the question box, to drop down your expectations for the session, what you'd love to learn, what you'd love to take home. I know that a lot of us have want to learn about investing and building wealth. So someone here says knowing the right AI stocks. Okay. George says passive income investment ideas in Nigeria and Africa. Beautiful. We have someone else says mutual funds and bonds investment. I want to learn how to invest in stocks and shares with Trove. Gospower, you are at the right place. First off, this event was organized by Trove. So you are definitely at the right place to learn how to invest with Trove. Then we have Bankole that says, I'm interested in having a better understanding of managing risk while investing. And we have Moses here says, I want to learn how to predict the future price of a stock in order to determine the kind of stocks to buy. Okay, we have, I'm looking to be properly educated financially, especially when it comes to passive investment. And you're definitely going to get good enough insight to know more about passive investment and how to get started. Someone says learn how to make passive income, to know how to make the right investment. All right. Then we have Wayne Jones talking about how to invest in private equity, government bonds, commercial papers. This is a lot for one session, but not to worry, you're going to learn right? You're going to learn just enough to know exactly what to invest in and how to go about making further research so that you can make better decisions for yourself. And Cecile says, credible or viable investment channels in Nigeria that take advantage of the current Nigerian situation. Nice. Okay, the right stock to invest in. I want to know honest opinion on investment duration, on compounding. I'd love to know about investing, increase my financial literacy. Beautiful, beautiful, beautiful. Thank you all so much for joining in the conversation. Yes. Thank you so much for joining in the conversation. By now, I'm going to be introducing the CEO of Trove, and I'm going to also be reading his bio. Okay. Okay. So I don't need to read his bio, but let's go. We have Oluchukwu on the call, and he's going to be giving us a very quick opening address for this session, and then afterwards we'll dive right into the event of today. So over to you, Mr. Oluchukwu.
Hi, everyone. Good to be here. Good morning, good afternoon, wherever you are. I'm super excited about the event. Thank you so much, first of all, to all the panelists. We really appreciate you taking the time. We know today is a public holiday, and I know how people guard their holidays, how much, how people like to sleep during the holidays or do something super exciting. But you've taken the time to, share, insights with everybody. I believe everybody on the call here, is super appreciative of, the opportunity to be here. I believe that everybody here is going to gain a lot from the panel here. I'm super excited about this panel. Last year's was, pretty interesting, but I'm super excited about the panel and all the knowledge exchange, knowledge sharing that will be done today here. So I would encourage everyone, as the moderator has said, to get your pens, your papers. Try to think up as many questions as you want. I know every time people are always sending messages asking, what can I do? What should I invest in? How should I invest? Asking a lot of questions, right? And a lot of those questions, unfortunately, are channeled to me, right? So people slide into my DM and ask me, random things about investing. But I think today is a perfect opportunity to do that and to ask those questions, to get answers from, super experienced people, people that have played in the space for quite some time. And it's, answers from a diverse set of people. So, I'm looking forward to the conversations. Once again, thank all of you. I thank you all for joining the event. And I also thank the speakers, the panelists for, accepting to speak at the event. And, I look forward to a very enjoyable conversation. I'll be somewhere on the background, just listening. I'll also drop a couple of questions, one or two myself, because, everybody needs to learn every now and then, right? So I also tap from the wealth of knowledge, and I ask all of you to do the same thing. So happy to be here. Thank you all of you for joining. And I wish all of us a happy deliberation. Thank you.
Thank you so much. Thank you so much, sir, for that very brief welcome note. I'm honestly excited to also be here because the lineup of speakers that we have is super packed. And that's why I've been admonishing, if your friend is not here, please get them in. If your friend is not here, ensure that they are here as soon as possible. So I'm going to be introducing our speakers as well as reading out their bio so you can know those you are going to be listening to, so you can know what you stand to gain. So in no particular order, I'm going to be reading out their bio. We have Mr. Seyi. You might know him as Seyi, the assistant. He's an executive level business consultant, a certified financial education instructor, and a strategic executive with 13 years experience in areas of corporate governance, administration, finance, and strategic planning. He has worked with business leaders across different industries such as management consulting, insurance, oil and gas, and manufacturing. And Seyi is known for his dedication to helping career professionals and entrepreneurs become better managers of their lives and finances. So do well to use the reaction box and leave your emojis. You can clap if you actually are excited to be here and to be listening to any of our speakers. Next on my list is we have Mr. Ejikeme Okoli. He's right here with us. He's a senior executive at United Capital PLC. PLC Group. He serves as the director, strategy and Africa operation, steering the growth strategy of the group, overseeing United Capital's burgeoning African businesses, driving implementations of its value proposition across the continent by facilitating cross-border capital flows, stimulating intra-Africa trade, and curating innovative solutions to meet the financial, investing, and capital rising needs of people, businesses, public institutions, and government. So Mr. Ejikeme's career journey integrates a broad spectrum of industries, and it includes finance, technology, energy, and sectors involving corporate strategy and business development, economic intelligence, as well as multinational experience with Chevron Corporation and Diego. So you can see that this is just one person. You can see that we are fully ready for you today. The lineup of the speaker is super, super packed and amazing. So I'm going to go on to the next person we have on board. We have Mrs. Fiona Ahmed, Ahimie, and I am very sorry if I did not pronounce her last name correctly. So she is currently the managing director of FBNQuest Securities Limited, a subsidiary of FBNQuest Merchant Bank, which is a subsidiary of First Bank of Nigeria Holding PLC. Fiona was the managing director of African Alliance Limited, a South African investment banking firm where she worked before her current role. She has also worked with Cordros Capital, Stanbic IBTC Bank, and Lead Capital Limited in different varying capacities. She's an accounting graduate from Lagos State University with equivalent professional qualifications as a chartered accountant and a chartered stockbroker. She holds an MBA from the prestigious Lagos Business School with a diploma from IESE Spain. Fiona is the first female vice president of the Chartered Institute of Stockbrokers of Nigeria, a position held by men for the last 30 years, which clearly distinguishes her as she served on various committees with exceptional contributions. Fiona serves on the board of Purple Real Estate Investment Limited, where she displays her advisory, supervisory abilities. She's also an active member of the Statutory Audit Committee of National Association of Security Dealers of Nigeria, popularly known as NASD, and the Central Security Clearing System Limited, that's CSCS. So she's also a member of the Curriculum Management and Learning Committee and a guest lecturer for the full-time MBA class of the Lagos Business School. She has vast experience in in-depth knowledge in finance, the capital market, with focus on strategy, project finance, asset management, and product development. She has successfully been able to set up working structures in unstructured environments. She's very passionate, professional, and entrepreneurial-minded, and serves on different advisory boards of several SMEs. Lastly, Fiona serves as a mentor to many professionals, including the WIMBIZ Women on Boards mentoring program and undergraduate for many years up until date. So I want to see like your reactions. I want to see you clapping, and yes, I want to see all of the reactions and excitement, because our lineup of speakers are very, very packed. Thank you so much for all of you that has been engaging with me. Then last but not least on this particular call for today because we have someone is not here. We have Mr. Gbolahan Aina. He's one of our speakers for today, and he's a consummate investment management professional whose experience cuts across business strategy, investment management, product development, wealth management, corporate finance, and investment research. He has over 16 years experience in the financial service industry and has been a strategic member in setting up of 2 asset management firms in Nigeria. He has provided investment advisory for diverse institutions and individuals over the course of his career. He has created varied products across asset classes and currencies. He had the responsibility of managing a multi-asset portfolio for one of the largest insurance firms in the country. He's also articulate and a frequent commentator on the economy, mutual funds, and the financial markets. He's an associate member of the Chartered Institute of Stockbrokers and an authorized dealing clerk of the Nigerian Stock Exchange. He's a strategic thinker and with an in-depth knowledge of economics and the financial market. He's an SEC-sponsored individual and the former treasurer of the Fund Managers Association of Nigeria. So I want to say a very big welcome and thank you to each and every one of you that is on this call with me today. Thank you so much for taking our time out of your holiday to impact all of us to learn better about our finances, building wealth, as well as learning how to invest passively. So I'm going to be heading straight right into the conversation for today. And I'd like to start with Mr. Seyi. And because we have a diverse group of people with us today, we have people that are already investing, we have people that are not investing, people that are interested in investing. I'd love you to just walk us through what investing is and what passive investing is. Over to you, Mr. Seyi.
All right, thank you very much, Oluchukwu. Morning, everyone, once more. Well, in the afternoon already. Good afternoon, everyone. And thank you for having me. So the subject of investing is really very, very interesting. And in the last 2 years, that's what I've dedicated my time, just educating people. So I like to see myself as a bridge between the financial world and the regular people, right? So even though I have accounting background, right, I really did not start doing this up until the last 2 years when I realized that a lot of people just waste money. And from my own personal experiences as well, I've had this very good experience of, I just save up my money and I can literally just carry on my savings and go to Dubai, blow it up, and then come back the next year. We're just reinventing the wheel. So a cycle of being broke repeated over and over again. So I've learned from my own experiences, and what I'm trying to do, what I've done in the last 2 years, is to help people see better and help them make better decisions where their money is concerned. And on the subject of passive investing, it's very interesting. I like to see it this way, that before it is passive, it needs to be active, right? Before you can start making some money from something passively, you must have invested over a while, right, actively into that thing. And then you now start making return from that endeavor, right? So that's the way I like to see passive income, right? You must have invested actively into something over an extended period of time. And then that thing now starts paying you. It's just like when people say easy ways to make money online. I like it. But the truth is there are really no easy ways to make money. There are ways to make money, but that easy, the way I say it is, that easy, remove them. There's nothing like easy. There are ways to make money, right? But you're not going to do anything and then money will come. It's a myth that doesn't happen, right? So that's my philosophy around passive investing and passive income. It has to be active first over a period of time, and then you now relax. It will now start paying you because you have put in the work that is required. And the other bit of it, the other part of it is that if you read, you are limited in your wealth capacity if all the money that comes to you is as a result of you exchanging time for money. Because active making money or active income is when you actively exchange time for money, maybe by way of entrepreneurship or by way of paid employment. If that is all you want to do, your wealth is limited. So you need to grow beyond exchanging time for money to such a time where you're not really exchanging time. You have done the job and that thing is just paying you. I would like to stop here so I don't take too much time. Thank you.
Oh, thank you so much for that response. I'd also like to call in Mr. Gbolahan to like also expand on like investing and passive investing as well.
Okay, thank you, Oluchukwu. I'm happy to be on this platform. And I think a big congratulations to Trove for putting this together. I think there's no better way to let people know about investing rather than informing them. So for me, I'm big on financial literacy. And I think this is such a huge and big platform for the people that are listening and going to learn. So I just try to take over from where Seyi stopped. So obviously for that to be passive, there must be an active investing. And pretty much investing is just putting money aside to get a future return, a better return. So that means there's a time factor. That means you intend to get a return. Those are key elements of investing. Something has been put aside, and in the future, you expect to have yielded something better. Unlike when you save money or you just put money under your pillow, you don't expect to see any return on that money. But in investing, you expect to see some return. And also means that there are going to be some certain risk that is involved with putting money aside. It can be counterparty risk. That means the person you're dealing with. It can be inflation risk. Like we all aware in Nigeria, everybody's fighting against inflation. Everybody's worried. Subsidy has been removed. Dollar has gone to 1,000. It can be exchange rate risk. But with investing, you put money aside to get another return. And in putting money aside, there are certain risks that you need to try to mitigate or try to overcome. However, there are different ways of investing, active or passive. Active means you are really involved by the second, by the day, by the minute, in terms of what you're buying, in terms of looking at what the stock market is, in terms of looking at what volatility is. When passive, it's more like you're just folding your legs and you're just enjoying the dividend from the investing, or you're just enjoying the return from the investing. So to put it in a simple term, passive investing really requires a buy and hold strategy. That means you have the notion that you can't always beat the market. You have the notion that the market is very effective. So rather than trying to just buy GTB and wonder whether GTB is going to do well or buying a Zenith Bank, you buy like an index that contains GTB, that contains Zenith, or you buy an ETF. So that's passive investing. Is a buy and hold strategy. And it means that you're having a long-term view of the market. And that's very important because equity market over time has been seen to outperform every other asset classes. So over time, within a week, within a month, within 3 months, the equity market might not perform well. But if you look at it over time, if you adjust on a risk-adjusted basis, you see that equity market always outperform. So passive investors really, they buy an index, they buy an ETF, they buy a mutual fund with the hope that that instrument that they've bought will give them a certain level of return that they want. And usually a long-term strategy, unlike a trader that is trying to do things by the day, things by the minute. A passive investor just buys for the long term. And because it's confident that the market always does well, can like go to bed and knows that over time, I'm sure I'm going to get the sort of return that I expect from that investment. So I'll just leave it like that so others can speak. Thank you.
Thank you so much, sir. Like you actually already set the tone for the next question that I have, because I was going to call on Mrs. Fiona to help share more light on passive investing and then active investing. Is there any difference that we need to know about? What makes them different? And if we're going to also be investing either passively or actively, how can you also, how can low-income earners also tend to take advantage of this?
Thank you very much, and good afternoon, everyone. I'm happy to be here, and I'm happy for us to learn something about taking control of our lives, because that is what investment actually kind of does for us. I'm going to piggyback on the question around what is investment, and why even invest at all. Now, as an individual, whether you are an adult that is working, or you are a student that is collecting pocket money, or you are not a student, but people give you money frequently or at every point in time, or you're just a business owner, you're just starting business, it is very critical and important for you to invest. Why do I say that? Monies come, monies go all the time. And it is important that you build a stream of resources that will keep augmenting your lifestyle somewhat. Now, when you get money, there's monies that you need to spend, because for you to be alive, you need to spend. So you're spending money, first of all, to be alive, for your needs, your rent, whatever it is, company, social, whatever it is. Now, you should be disciplined enough to also set aside some money for savings. Savings is just that bucket of monies that in case anything comes up in future, you can quickly, go back to it and say, okay, I've saved this money for this, either it is targeted savings, for a particular asset, a particular program, particular events, or whatever it is, or if eventually, something just spring up on you from the blues, you have some money you've saved away that can, help to solve those kind of problems. Then there is the investment bit. So the investment bit is that money that you actually put into an asset to yield additional revenues for you. So that is your money actually working for you. So you have the money for spending, the money for savings, and then the money for investment. So you should never, get these things mixed up. Always put these monies in this bucket. Now, what is passive investment? What is active investment? My other colleagues have spoken a bit about these things, but let me just tell you just something else that maybe hasn't been mentioned. Now, passive investments. There is this investment money that I've kept away that I wanted to yield something for me. But I don't have time. I am not very savvy with investments, but I know that there is a piece of land that is, I've checked through and it's legal and I can actually put money into it. You buy that piece of land and then it is lying down there up until when you are ready to do whatever it is. The land is appreciating. You are not going to look at the land every day. So that's passive investment. Yeah, you go to your banker, you ask your bank, okay, how much can I get if I buy, for example, like a treasury bill? And so you can get 11% at 1 year. You put that money there and you just leave it and you expect that revenue to come in for you. The federal government has savings bonds, but people were asking about bonds, 2 years, 3 years, It is passive. It's the minimum investment is 5,000 naira. You invest in it 2 years, 3 years, you get your principal back. However, intermittently, you are getting interest. So you're not doing anything on a daily, but revenue is coming in. Whereas maybe you might be very savvy, you understand the markets, you understand real estate, you understand equities, you understand bonds. You see that the bond price of a particular company has gone up. You want to trade it, take your profits right now because you have information and you think that, the price might go down in the future. So you take advantage and exit that position. Or you see a company, that is doing very well. The price was at 50 naira when you invested. The price has gone to 75 naira. That's a 50% upside. I want to take my profits, wait for it to come down again, and I get back into it. So that's active investment. You're actually involved, in a regular evaluation of your portfolio. And how much do you need to have to be able to invest? As little as 1,000 naira, you can start investing. You don't need to be rich. You don't need to have a big job. That's why I said, even if you are a student, you can actually invest. So as little as that, you can invest. Thank you.
Thank you so much. Like, you literally broke it down to the minimum. And like, I think I'm going to be repeating this a lot, but the way you said that you have to be very particular about your spending, you're saving, then investing. And then you can start with 1,000 or 5,000, depending on what you want to invest in. This sort of now helps to open up the another question, which is, I know a lot of people always seem to feel like, oh, for you to start investing, you need to have a lot of money. The only people that invest are like high income earners, mid income earners. So what about low income earners? How do they start their journey? How can they start building wealth? I know you already said, like, okay, we could start with 1,000 naira, depending on the particular asset you're getting into. But is there like a strategy they can have? Is there like a mindset shift they need to have for them to, for low income earners to start thinking about building wealth?
Yes, I mean, everything you need in life, you need to plan. And they say if you fail to plan, you plan to fail. So even though you can start with as little as 1,000 naira to make an investment, and it's not all kind of investment. So for example, if you want to go into real estate, 1,000 naira is not going to get you in real estate, but there is something for everybody. And you have to be very deliberate and you plan. So you set up aside a specific amount regularly up until you get that money. So I said you have an investment, a savings bucket as well. So if, for example, you have it, you dimension yourself and say, any amount of money I get, because I need to be alive and live, I'm going to spend 50% to stay alive. I am going to save 20% and I'm going to keep 30% as investments, or however you want to structure it, depending on your responsibilities. So you keep setting these monies aside religiously, deliberately. Come rain, come shine, there's some monies you will not touch up until it gets to that level for that particular investment or that asset you want to invest into. So you have to just be deliberate and consciously make effort. You can even put a standing order on your bank and say, okay, my bank, I get my salaries coming in every, say, 25th. On the 26th of the month, every month, swipe out 30% of this monies and put into this dedicated account. So that way you continue to build your resources to be able to invest in the asset class that suits you. Thank you.
Okay, thank you so much for that. We have to plan, we have to have a strategy, but I'd also like someone else to throw more light on investing as a low-income earner. So I'd like to call on Mr. Okoli. Could you also please shed more light on how low-income earners can build wealth?
Okay. Thank you. I think Fiona had touched on that extensively, but I'll try and summarize into a structured format that our listeners can take away in addition to the elucidation she has provided. So think of wealth as a wheel, right? Comprising four components. Your earnings. Your earnings is your primary source of income, and she categorized them. It could be your salary, your pocket money from relatives, from well-wishers. It could be even earnings from your business if you're an entrepreneur. So let's keep that bucket as primary earnings, right? Now, the next part of the wheel is, if you must build wealth at all, this next part is the more important one, which is having savings. So you must spend less than you earn over a period, because it's what you are able to eke out of your primary source of income that becomes the resource for wealth generation. So earnings, next is saving. And for you to have savings, it's two things. You're either increasing your earnings or you're reducing your expenses. So that's the only way savings grows. You're either increasing the primary source of income. So if you're one on pocket money, get as many people to give you pocket money. Yes, it's earnings. Or increase your revenue from your business, or get a higher paying activity that it puts more money in your pocket. Now, when you're able to increase that savings bucket, now you've not started investing, you're just keeping something aside from your primary source of income. That next part is investing. Now, this is where risk comes in, because so many asset classes have different levels of risk. Gbolahan had, equally mentioned that the equities market, yes, it has the highest level of
Okay, hi. I think can we all hear Mr. Okoli?
simple as a savings account.
Okay.
Okay.
Yeah, you froze for a minute.
Oh, okay. It can be as simple as a savings account in a bank. Yeah. So these are structured has to come with invest in any other kind of asset class. Now, in choosing so it now depends on your appetite for risk, which I'm sure we would look at as we go on the program on this event a lot more. Some people look at risk as a function of age. Some look at risk as a function of your time horizon for what you want to use your investments for. If I say I'm saving for to get married in 1 year and there's a particular goal I'm looking at, I'll probably look for an asset class that can deliver that at least without easier to take on a higher risk in the market. There you start looking at equities and other asset classes that are volatile. Even currency trading is a form of investing. But all of this comes with knowledge. But for low-income earners, I think it doesn't get more basic than earning some interest, even on if it's a bank account for the formal financial services. In so many hinterlands in Nigeria, we also have thrift collectors who have informal sorts of savings where people pull money together and it earns an interest so that subsequent members can also earn, a certain level of interest on their contributions. So investing has taken on various forms, throughout the life cycle of man since time immemorial. Yeah. But looking at where we are today, low-income earners, the most important activity to even start building wealth is to have savings. No matter what you earn, no matter what that primary source of income is, you must always set something aside as the vehicle to start earning a return. And basically, savings accounts in banks. And then if you want to get exposed to the capital markets, financial education has to come in. Mutual funds, especially money market funds. Fiona had also mentioned savings bonds by the federal government, 2-3 year horizons with very decent returns in double digits. I'm looking at Nigeria now as a use case. And then the fourth part in this wheel is growing your return on investments. Now that comes with risk. It comes with education. And the more you increase your knowledge about finances, the knowledge about finance, about investments, about different asset classes, having a network, that speculates, because wealth building involves a lot of speculation, regardless of what the asset class is. But that's the fourth part. So have primary earnings, spend less than you earn so you can have savings, commit that savings to an investment, preferably depending on, doesn't get more basic than a savings account in a bank, anything that earns an interest over a period and your funds are safe. And that's why I use banks as as you're building any interest on the resources that you have put aside, you should strive to grow the returns on your investment depending on your time horizon. So that way you see it just goes round in a cycle. So as you're growing your returns on investment, it means you're increasing your earnings. Those earnings are going back into the wheel because as your earnings are increasing, you're putting it back in different asset classes. That's where diversification now comes in. You now start to choose what your investing goals are, your appetite for risk, Do you want higher returns? Are you diversifying across geographies? So diversification is not just across asset classes, it can also be across geographies, across different risk profiles, depending on your level of financial knowledge, your appetite, capacity, and tolerance for risk, the kind of advisors that you work with, and most importantly, what your ultimate goals for investing is. Some just want to invest and hit a certain number and feel wealthy. For others, it's about having enough to give back. For some, it's just sustaining, a personal lifestyle throughout their time here on earth. For some, it's to start chains of businesses that can, enhance economic development. So goals for investing differ. Depending on whether it's an individual, an institution, a government. So the target market is not restricted to us as individuals, but we are the single unit, most basic unit of what an investor should be, because an institution at the end of the day is still a collection of individuals, but the goals differ. But to wrap it up, for low-income earners, no matter the source of income, have savings, deploy those savings to an asset class that returns interest, and over time try to grow that return on investment so that wheel of wealth can continue to increase earnings over time while increasing your financial education and understanding your appetite for risk.
Yeah, thank you so much for that extensive explanation. So if you're still with us, you're still listening, please do well to start taking note of your learnings, and also you could put it on social media, Twitter, Facebook, Instagram, with the hashtag Multiplier Conference with Trove, hashtag Passive Investing with Trove. So moving on to our next question, when Mr. Seyi was speaking initially, he talked about how he did not start early. So I want to ask Mr. Gbolahan, what are those mistakes that you see people make when it comes to investing, when it comes to building wealth? Because could you share a few of them that we need to take note of so we do not make those mistakes ourselves?
Okay, great. Very important question. There are a lot of mistakes, a lot of myths that people make, and I've fallen victim as well. I'll share some of my personal experience. But just to mention a few, some people think that investment is just for the rich people, and I'm glad that the other question was talking about what low-income people can earn. And obviously anybody can invest. There are different level of investments. There are investment of 1,000, mutual funds of 2,500, 1,000, and more or less just democratizing investing. I know for Trove as well, I know there are different price limit, price point that people can invest as well. It does not involve a lot of huge financial commitment. So that's a myth. That's not right, that you think investment is just for the rich people. Sometimes there's usually a misalignment or a mismatch in terms of expectation and return. We see a lot of people invest in the equity markets and thinking that it's a short-term investment, and they've gotten bonds. So one needs to understand asset classes and sort of returns that you can get from those asset classes. Some people think that so let me give my own personal example. And I don't know whether people are familiar with the Wonder Banks. I can remember I was fresh out of school, possibly maybe 18 years ago. And we had a lot about these Wonder Banks that will promise you, if you put 2.5, you get 2.5 million in a month and things like that. I can remember collecting money from my mom, borrowed her and told her that she's not worried that I can even pay ×5 of that amount. So I got that money for myself. I got that to invest as well. And I did some of these funny things. And interestingly, some other people have been doing it. They got lucky. They got their money back. And it was when I did it, CBS to clamp on them, and that was how my money went away. There was someone that I knew as well, was like a distant family friend. He just retired and put all these retirement saving funds in this sort of Wonder Banks. So the first time he did it, was lucky. He got about maybe 40% in a month. That time he just put part of the money. Second time he put about 20%. Unfortunately for him, he thought it was too good to be true, and he put 100% his own retirement saving money. And that was when they were clamped down on, and the guy lost all his retirement money, his gratuity, to put it in perspective. And the guy that is meant to be enjoying his retirement probably traveling around the world, is living in penury more or less. So to think that you can get abnormal return from investing sometimes also a mistake. So people just have that some people say that there's no risk in investing. That's a lie. That's a fallacy. With every investment, there are risk levels. It's to understand the sort of risk that is in that sort of investing. So I think that's a mistake. That's a myth as well, to think that there's no risk in investing. Every investment has a certain level of risk, but one should be able to itemize the risk. Is it like market risk? That means it's price fluctuation. Is it exchange rate risk? Is it inflation risk? But one must understand the certain level of risk in that investing, and also be able to be comfortable with that investing. Even when you do a low risk investment, there's inflation risk as well. There's a risk that so the money won't be able to do what it could do like a year ago. And of course, that's a reality for a lot of us in Nigeria. That inflation risk is evident. Fuel was probably can't remember what it was, maybe about 160. Is just less than 600 today. So inflation risk is a reality. So I think that's a myth, and I think for me, over time, so I began to learn about investing. I began to learn what was possible. And when we had the recent episode of I think MMM, and I can remember telling a lot of people that it was just going to be a matter of time that this thing was going to collapse. And people thought I was nuts. They thought I was crazy because everybody was cashing out. And at some point, I thought I was nuts as well, because I could see people cashing out. I could see people making money. And it seemed as if it was too good to be true, but it was just a matter of time. They all like fell down the pack of cards. So to just summarize, so I can just give other people an opportunity to talk as well. So one, anybody can invest. You don't need to be wealthy or to be too rich to invest. And it's also important to know your life cycle. So in investing is what you call like life cycle of investing. At every point in time, you can invest either as a student, either as a fresh graduate, either as someone that just started working, either as someone that's retired, either as someone that is. So you need to understand your life cycle, and there are various life cycles, but accumulation, consolidation, dissipation. But you need to understand your life cycle. You need to know that there are different kind of investing and the risk involved in that investing. Anybody tell you that there's no risk in that investment, just know that it is a lie. Every investing has risk, but there are different kind of risk. There's low risk, there's high risk. And what we say in investing is that the higher the risk, the higher the return, the lower the risk, the lower the return. So equity has some of the highest risk, but potentially as well, it gives the highest return as well. So I'll just leave it at that. Thank you for the question.
Yeah, thank you so much. Like, you already set the tone for the next set of questions. So I'm going to ask our audience, please start putting your questions in the question box so that we can attend to it as we are heading to the end of the session. So before we move on, I'd like to move on to the next set of questions, which is like, what are those? Oh, that will be going to Mr. Seyi. So what are those things that we need to know about, those different asset classes, those things that are going to be in our portfolio? Because if you're talking about risk, then you need to have a diversified portfolio. I know a lot of people know the different names of vehicles and assets that we should know about. So could you just like give us like a very quick overview of the names and where they fall into, and so we could take note of that, then move to the next one.
All right, thank you very much. Okay, I think that question should have gone to Mrs. Fiona. Okay, let me just say that for me, I believe that the goal of investing is in twofold, right? The first one is there are some vehicles that are basically for capital preservation. I don't want to lose my money. I just want to praise. So it's not necessarily about the interest or the outright I get from it that is important to me. I'm just concerned. I don't want to lose the money. So I want to go for low risk investment that would also give me low return, but I'm sure that my money is somewhere and I'm not going to lose it. The other part is capital appreciation. I'm interested in making a lot of money, and that is why I'm invested. So if you understand those two dimensions, we can now say that equities, just like Mr. Gbolahan had said, equity is one of the equity means shares, right? It means, and what is share? Because a lot of times we assume that people understand all these things, right? Someone has asked me, I don't even know what, I said, open an account with a stockbroking firm. And the person was like, What's a stockbroking firm? I don't understand. What does it mean to have share? I don't understand. So we assume a lot that people understand this thing. So what is a share? What is share? What are shares? A share is the unit of capital. It means that when you have share in a company, you are one of the owners of that company. So if I buy 1,000 units of MTN shares now, it means potentially, it means potentially I'm one of the micro owners or mini owners of MTN, right? And that gives me some rights. One of such rights is right to a share of their profit. When they declare profit, they pay dividends, which can be whether interim or final dividend. A lot of them pay twice a year, interim and then final dividend. I have a share of that profit. The other way you make money through equity is through capital gain. So when I use this example a lot. I bought Transcorp shares earlier in the year when it was less than 1.5. And then over the last 5, 6, 7, 8 months, it had grown to about 6 point something. So potentially it means if I invested 1 million, my 1 million has become 6 million. It doesn't happen like that all the time. That is why equity is one of the investment that has high risk and high return. There's hardly any investment that you can make that kind of return from. But the same way it rose, some people also told me that when I made that post, of what Transcorp has done, some people now commented to say that I bought this same Transcorp shares 7 years ago. I bought it at 7 naira per share, and then it went to less than 1 naira. And I quickly exonerated myself that, well, I'm just lucky to have it good. And that is the way it works. So some people will earn so much money, other people will lose money, right? But it has, the point is that equity is one of the best that has, you can give you more money, and the same way your money can go down. And I'm not even, and even when I see all these things online as well, you also want to be careful, right? Not to recommend, and then people now hold you. You are the one that said this share is that, but that's the way it works. The other class of investment that I do, that I use, my goal for doing them is capital preservation. I don't want to lose my money. I don't put all my money inside shares. So if I have 1 million naira to invest right now, what I do is I have percentages. Maybe about 20% will go into equities. Then maybe 70% will go into like money market, right? Where I know that I can potentially quickly take the money. So it's always about the goal as well. So for my emergency savings, I don't put my emergency savings in a bank account because I also want it to earn something. But I put it in a vehicle where I can call it within 48 hours. Vehicles like money market. Once I've put it there, it is earning something much more than it being in a bank savings account. Because if you are putting your money in a bank savings account, you are losing the money. What that means is, if you put 1 million in your standard Stanbic IBTC savings account, let's just say, in January, 1 million naira. As of today, because of inflation, you no longer have 1 million again. Inflation has eaten part of the money. But what do you put the money in, say, money market or other fixed income instruments, right? What you have done is you are kind of edging against inflation. So even though you are not earning so much, the return that you might be earning can help you to safeguard or mitigate or reduce the impacts that inflation would have had on your finance. So I've said money market, I've said fixed instrument, things like bonds, right? Government bonds. It can be government bond, it can be corporate bonds, it can be state bond. And government bond is when federal government wants to raise money from the market, right? They can issue bond. The same way Lagos state government can say they want to raise money, they can also issue bonds. So then there are commercial papers, there are several other instruments that you can invest into. So I'll just leave it for the core professionals to do justice to the question. Thank you very much.
Wow, thank you so much. I loved how you started about talking about your preserving your capital, you're growing your capital, and then you expanded on that here. So you also mentioned the risk aspect. So I'd like to ask Mrs. Fiona about risk. There's a part where, okay, we want to invest, and like Mr. Gbolahan earlier mentioned, if anyone tells you that you're not going to lose that money at all, then you should run away. So can you please shed more light on risk management and stability? Like, what should we take note of? What are the questions we should ask ourselves? How do we go about doing the research to be sure that we are on the right path when it comes to risk assessment for investing passively? Yeah.
Thank you so much. And I'd say everything in life is risk. Everything, you know. So when you wake up in the morning and you want to step out of your bed, you put one leg down to bring the other leg. You can sprain something. You haven't done anything. You're just coming up from your bed and there's a risk something has happened. You can sprain, yeah. Or you decide, okay, I'm not even going to come out of bed at all. I'm just going to be lying in my bed. And then you have bed sores because you didn't leave your bed and you're lying in one position, and then you have body pains and all that. So everything in this life is a risk. All you have to do is make sure that the risk you are taking is something you can live with. Yeah. So when you are making an investment, first of all, you need to understand the kind of person that you are. If you know that that money you are putting into that investment, you are going to be having heart attack or panic attack anytime you see that the value is going down, please don't go into that kind of investment. If you know you're that person that when you make an investment, you want to be looking at it every day. And you want to say, okay, has it gone up? Has it gone down? And every time it fluctuates either way, you are shaking. That kind of investment is not for you. So first of all, you need to understand yourself. You need to understand your risk appetite. And also, whilst you're factoring in risk in everything you do, look at the timing of that investment. So I am planning for a wedding. The wedding is happening in 6 months' time. I've seen this company, Equities Investment, a company that is listed on the Nigerian Stock Exchange, London Stock Exchange, New York Stock Exchange, that is doing very well. So I'd say over the last 3 months, this company has returned about 20%, 15%, you know, so that means this company is going to grow. However, investment in equities is longer tenured. But this money you are investing is for 6 months. So if by the time the wedding is ready, you need that money to make that investment, and you go back and the stock price or the company is not trading at the place where you expect it to be, then you would have either lost value or it's still the same stagnant monies. And then you start to cry and worry that why would I even have made that investment? So first of all, you need to understand your risk, and you also have to understand the time, the horizon for the investment you are making. Now, before you make any investments, who are you investing with? You need to do your due diligence about the company that you're investing in. And when we say equities is basically, equities investment is basically investing in a company. I want to be a part owner of a company so that when the company makes profits, I share in it. When they make a loss, I share in it. Now, fixed income, bonds, commercial paper is all about you saying, okay, this company, this government, this state is looking for money. I am happy to borrow them my money so that they can give me some returns in terms of interest. And at the end of the period of that borrowing, they will give me back my principal. Now, you have to analyze yourself and say, is this an investment I want to make? And who exactly am I making this company investment with? So a company comes out to say, issuing out a commercial paper. Commercial papers are usually tenured to a maximum of 1 year. I'm issuing a commercial paper. I'm going to offer you 35% interest. It sounds too good to be true. You don't analyze a company. You don't do your due diligence. You don't do anything. You just saw the 35% and you just jumped into it. That is a very high risk. Always do your due diligence on the companies you want to invest in. Always look at the growth potential of the companies you want to invest in. Always look at the management, the people who are managing the affairs of this company. Are they dubious people? Are they people that would know are just, 1 minute they are hot and trying to drive the business, another minute they don't want to do anything and they can leave the business and leave your money hanging. So before you make any investment, these are the risks that you need to actually pay attention to and things you need to do. Now, when you are making some of this investment, there are a lot of scams, like Gbolahan mentioned, around. Some of these companies are not even registered with SEC. So before you do anything, check the website of SEC. This company, are they even registered? These people that are doing crowdfunding here, doing this, doing whatever it is they are doing that are promising me heaven and earth, are they registered? Am I just going to give my money to anybody? And at the end of the day, if the money disappears, who am I going to speak to? Look at reviews. Funny enough how, everybody is on social media, but a lot of people don't pay attention to very little things. I'll give an example. I went to the salon. I have some person that does my hair all the time. So this particular day, I went there and she wasn't in. So I asked one of the stylists to help me. And she was like, Madam, how you like your things. I don't know how to do this one. And I asked her, do you have a phone? She said, yes. I said, do you do YouTube, TikTok? She said, yes. I said, see, everything your madam is doing in this shop is on YouTube. Just type in, how do I curl a hair? How do I tongue? How do I this? All you have to do, all the information is going to come out. And when you read all this information, you go down, you see reviews. Oh, when I tongued it like this, it didn't come out this way. I applied this particular cream and it came out better. So when you're making your investment, there's so much information out there. All you have to do is Google it and check all the reviews. Check the sites of regulators to see that all those people that are pushing out all these investment opportunities are registered. And to a very large extent, even though everything you do in life is risk, you'll be able to mitigate some of the risk. So I'll just give chance for other people to make their comments. Thank you.
Yeah, thank you so much, Ma. That was really, really extensive. And I want to let you all know that I can see your questions are coming in. Please do well to use the question box, Q&A, to ask your questions. I will do well to respond to them. While she was speaking, she did mention how you should always check for reviews, do your due diligence, check if this company you're interested in is registered, what has been their history and all of that. That way you are saving yourself from the risk of, just in case you're someone who said, oh, I don't want to lose my money. This is one very simple thing you could do to be sure that you have done your part. And you're sure that the remaining part will be like the economic aspect or how they run the company and what your interest is going to look like. So please, it's very important that we all take our time to just read a little bit more, do a little bit more research, ask funny questions. Just those things are going to open your eyes to more things. Yeah. So for this particular session, we've extensively talked about a lot of things. However, I just realized that we've not talked about how technology would help you to grow your investment, how you can harness technology to go ahead to invest passively. So I'd love Mr. Gbolahan to help shed more light. What's your take on passive investment and how does technology have a direct impact to helping us achieve this goal of building wealth through passive investment?
Okay, great. Technology is an enabler, and that means it helps you to do what you should do easier, faster, and better. I think as a passive investor, there's no better way to probably leverage on investing if you are not going to use technology. There's loads of advantages that come with using technology. One is cheaper to use technology or an app. If you're engaging a person, for instance, you pay much more. So with using technology, we have lower fees, lower cost. With a lot of technology platform as well, you have things like analytics. So what analytics means that you're able to see maybe pattern, trends. You're able to get researches as well about maybe that product, that ETF, whatever you're investing in. Technology provides you that. I know for Trove platform, for instance, you can see a lot of that. For Bloomberg, for instance, you see a lot of analytics. And that's very important when you're investing. You need to be able to look at performance of the stock over time. You need to be able to get research from that particular stock or that instrument you're investing in. So technology provides that for you. Also, is more like on the go rather than having to probably send an email or visit a friend, for instance. With technology, just by your app, like someone usually jokes, it's as if you're playing computer game with a lot of the apps. So yeah, it's seamless, and you can also trade and invest with technology. So there are tons of things that technology can do for you. And just to summarize, I know I mentioned a few things. One, lower fees, lower costs. One, analytics. One, you're able to leverage on research as well. And of course, that convenience is super is a super benefit that you can always invest at the convenience, either at home, either on the car, really on the go, you can invest. And it also allows you to also trade different asset classes, currencies. I think that's some of the beauty of technology. It's more or less democratizing investing, and it's more or less just creating a level playing ground for everybody. Because really, some people won't talk to you. They'll say, if you don't have 100 million naira, please don't talk to us. If you don't have 1 billion naira, don't talk to us. But technology is really like everybody can have access to investing. So it's more like democratizing investing, making it easy, making it seamless, and making it affordable. And yeah, so I'll stop at that.
Well, thank you very much. So we have technology helps us to have like lower barrier entry, less fees, we're saving money while building wealth. Like that's what I actually just picked out. Like that was very good. Okay, so I'm going to ask Mr. Okoli this particular question, because we've talked about how it's important for us to start where we are, start small and all of that. But there's this thing we call called compound interest. There's the power of compounding. So half the time, most of the time actually has a very huge role to play when you're compounding. So would you like to share more light on how it is very important for us to try and ensure that we are milking compounding whenever we are investing?
Okay, thank you. I have two quotes from very famous gentlemen in history. The first is Albert Einstein. He said, compound interest is the eighth wonder of the world. And then the other is by a musician who says the only thing undefeated is time, meaning nothing defeats time because time is infinite. Now, for compound interest being the eighth wonder of the world, it's really where you start to see the time value of.
Please hold on, you're currently mute.
Oh, sorry. Yeah. Oh, so I'll start again. I'm sure nobody heard what I said. So I'll start with two famous quotes from two gentlemen. One is Albert Einstein, who says, compound interest is the eighth wonder of the world. Yeah. And the second quote is from a musician called Nasir Jones, who says, the only thing in this world that's undefeated is time, meaning time is infinite, but you and I, at some point will be finite. Everything on earth will be finite, but time itself is infinite. So people who know how to use time in investing are often the biggest beneficiaries. Now, to touch more on compound interest, when I was in primary school and I saw that it was the difficult part of the simple interest calculation in mathematics classes. And I used to ask myself, why don't we just stop at simple interest, principal times rate times time, principal time, yeah, PRT over 100, and then that's it. And there's the compound interest part. It wasn't until I became, a professional and started investing actively that you start to see the wonders of compound interest. Now, what's compound interest really? It's investing in an asset class. It yields a return. Now, the return is added back to the principal. So you have a higher principal amount to start another cycle of investing. So it means the more interest accrues to your investment, and if you remember when I talked about that wheel of wealth, that's really the wonder of compound interest. You have a starting amount, say 1 million naira. You invest in an asset class, maybe a stock or a fixed interest rate, asset that gives, say, 10%. It means at the end of 1 year, you will have 1,100,000. Yeah. So rather than taking out your 100,000 as interest earned and you still have 1 million to invest again, the theory of compound interest is leave that interest accrued So you have a higher principal amount. So in year 2, you're not starting from 1 million now, you're starting from 1,100,000. Now, 1,100,000, let's say at the same 10% will yield 110,000 by the end of year 2. So you're adding 110,000 now to 1.1 million. So you're having 1,210,000 at year 3. But if you had been taking out the interest, for other things, you still have that principal amount of 1 million naira, which will, if interest rate stays the same, will only yield a fixed amount. So the power of compound interest is simply trying to use, to grow your investments as much as possible by ensuring that the interest that accrues on that investment, or whatever return it earns, say it's a dividend. So in the stock market, where compound interest really works, if we have to use dividend to explain better. So when you buy into the shares of a company, they do well, they share a profit, the share price goes up. Yeah, and many companies also pay dividends to their shareholders, either as interim or as final. So it means whatever dividends you're earning, rather than spend it or use it for something else, you use those dividends to purchase additional units, of that same stock. So you have a lot more. Yeah. So it's more or less the company putting money in your hands and you're using it to reinvest, into the company. If you think of all founders, all people with substantial stakes in their organizations, that's really where the wealth comes from, because you have a significant stake in the company. The more the company becomes profitable, it means your own wealth, your own stake in quotes in the company increases. And whatever cash flows as a result of dividend paid, or share bonuses are also reinvested back, into the stock. And then over time, say a 5-year, 6-year, 10-year frame, because where the compound interest becomes very profound, it's when you have a time frame. And today, one of the greatest investors in the world that's most revered is Warren Buffett. Why? Not because he has done anything spectacular, but he has been able to use time to its fullest advantage. He started investing at 11. Today, he's 93. So he has seen booms and busts. He has seen recessions. He has seen economic booms. He has seen, the rise and fall of technologies. He has seen, star investment managers, create. Gbolahan talked about wonder banks. America also had its own share of wonder banks and wonder fund managers, so that's why I said the only thing undefeated is time. So things that are not consistent with, what a proper investment horizon should be, over time, it fizzles out. So the only thing that stays true, is time-tested strategies with regards to investing. So compound interest, like I said, 8th wonder of the world. It's simply investing in an asset class and ensuring that the returns are added back to the principal so that it starts to compound over time. So that way you would hit a higher investment target within a shorter time frame, as against if you had to spend or reduce the returns or interest earned on a particular investment. So I'll leave it at that for now. Thank you.
Thank you so much. That was really clear, very, very clear. So now we have a very good idea as to how and why we should compound when it comes to building wealth and growing our different investment portfolios. So I have like 2 more questions, but we are running out of time and we really want to take a lot of questions from the audience. So please, if you're yet to send in your questions, do well to drop them in the Q&A box right now so that your questions can be answered as well. So I know that a couple of people will be wondering, okay, you've told us to go and do our research, you've told us to take note of the different investment things we should know about, we should read about the companies and all of that. So I'd like to put this to Seyi. You're with me, yes? Okay, so I'd like to put this to you that, okay, what are those resources that where would you recommend we go ahead to go and read? Is there a way we can structure our learning or our research? Fine, we'll go on Google, right? But what are those tools we could make use of that will make our journey better and would help us have like a more structured mode of learning all of these things that we want to start implementing in our finances, in our investing.
Okay, thank you so much. I think it depends on the investing or the asset class you're looking at, right? Particularly, this is what I do. I've signed up. I have some of the leading investment banks that I have accounts with, and I used to comment on their so I think right now a lot of banks or investment banks, they are doing much more than just the basic of helping you keep your money and all of that. They send you research news, right? I don't want to mention any names now. I'm subscribed to some of their executives are here as well. I'm subscribed to, so I won't say their research department doing a lot of good work. So on a daily basis, they send me, even though I don't have to read it, but I get emails daily that tells me what is the outlook, right, of the stock market. What investment class should I be looking at? Do you understand? So some of these things, those are the easiest way, rather than, because I know what you're saying, that a lot of people come to me as well, that you tell us to do research. What are the information to check out? I don't even know that to start with. So I am saying the best way for some people that don't want to do any work, if you don't want to do the work yourself, these guys do the work for you. Open an account, open a stockbroking account with any of the leading firms. They send you investment related news, right? And they educate you. It's more like a journey that you are on with them, right? They educate you on that journey. So more specifically, if you're looking to invest into, say, stock equities, right? What are the important information to look out for about the company that you're investing in? I say, don't neglect news. There is power in news. What news has come out about that company in the last 2-3 years? So we neglect these things. If I hear that the MD of the company I'm trying to buy shares in has EFCC case, that's a sign. That's a very bad sign, right? If I hear that the company that I want to buy their shares, that they are the ones that they are always deferring, they are always late to submit their financials to NGX, it's a sign. It's a sign of problem with leadership and governance, because that's very important. Leadership is important. They also want to look at how, I'm talking about shares now, I want to buy shares in a company, I want to look at what is the dividend history, right? I remember making a post of MTN declaring shares and some of the companies that have declared interim dividend in this 2023. And some people reached out to me that, I bought this particular shares, 25 years, shishi, I've not received. So these are some of the things that are important. You don't just buy shares. It's not just about buying shares. You have to look at dividend history, and it will surprise you that financials of every company can be gotten online, right? Just type, I want to buy shares in GT Bank. What are the things I need to look out for? I've listed out those variables, leadership. I've listed out dividend history. I've listed out what is the financial performance in the last 5 years. All I just need to do, put on Google, financial statements of GTB for 2022. It will take point I also want to quickly drop is, it is not who tells you about an investment that is important, no matter who is telling you. Me, I'm very brutal. Even if my pastor, that's one of the person that I trust the most. If my pastor tells me about an investment, I will say, thank you, sir. I'll go and do my research about it before I put my money. And that's my life. And that's what I encourage people to also do as well. Thank you.
Thank you so much. I love that last point, whereby no matter what, even if you're getting the information, still go back, verify, check for yourself, read and be sure that, okay, I understand everything that this person has said for myself. So I'd like to say thank you so much to everyone that has been here to this time. If you do have questions, the question box is very open, and we're going to be taking questions very soon. But I have just one question left for everybody on the panel session. And it's going to be like, okay, if you could offer a piece of advice to everyone looking to start out their investing journey, their building wealth journey, what would it be? So I'm going to just call out, I'll start with Mr. Gbolahan, then Mrs. Fiona, then Seyi, and then Okoli. You guys can just go in that order. Just a piece of advice to everyone starting out their journey. What should they take note of? What is that thing that they should do?
Okay,
Thank
great.
you.
Yeah, so one is never too late to start. Start from where you are, and of course, get knowledge. With knowledge, you avoid mistakes, and always seek professional advice. So I'll just leave it at that. Start from where you are, never too late to start, and of course, seek knowledge in your financial journey.
Okay, so that's me now.
Yes.
Okay, fantastic. So Gbolahan has captured it, but I'll just say, right from now, picture your future self. What kind of a future Fiona do I want to be when I retire? What kind of lifestyle do I want to live? How do I want to look and appear? What are the things I'd like to do? What is fun for me? And when you know those things that you want to achieve in the future, it's going to be enough motivation for you to set those goals and put those plans in place to ensure that you're working towards achieving that future Fiona life. Thank you.
Thank you.
Okay, mine is more like that. And I took the point from our parents. I think a lot of our parents made this mistake, which we should also try to avoid. The mistake of not planning their future because they were raising us, right? They wanted to pay school fees, they paid our school fees. Now, they've raised us, a lot of us are working, and they are pressuring us to bring money to meet their needs. But they don't know that the economy has changed. Some of us can't even afford, all you earn is 200K. And they want you, inside your 200K, they want you to pay your 3 siblings' school fees. You are in Lagos facing traffic every day, so you are pressured. It is impossible. So they used you as their retirement plan. Don't make that same mistake. While you are doing all those things, set something aside for yourself. Every generation is supposed to be an improvement on the previous. If they make the mistake of not planning, right, for their future because they're taking care of you, don't repeat the same. A good man leaves an inheritance for his children's children. A good man does not wait for his children to come and feed him. That is my parting word. Thank you.
Okay, for me, I'll wrap it up. Spend less than you earn through lifestyle changes and ensure that extra goes into an investment that you totally understand and will give you a return. Once you form that habit, you're going to make progress on your journey to building wealth.
Okay, thank you so much. And this has been a very insightful, wholesome, and resourceful session so far. And we have a couple of questions in the question box, and I'll go ahead to scan through because I see that some of the questions that were here have already been treated. So yes, that this is very great. So one question here that would be going to Mr. Gbolahan was where you talked about the life cycle of an investment. So could you please, this is from Kosoko. I would like further explanation on investment life cycles as mentioned by Mr. Gbolahan earlier. So please, could you throw more light to this?
Okay, yes, so great. And I usually use this analogy when I try to describe investment life cycle. And think of a butterfly or a mosquito. A lot of us in biology class or primary school did life cycle of a butterfly. And now the butterfly moves from the egg, the larva, the pupa, and the butterfly. And from each stage of that life cycle, it has different characteristics, different behavior. So for us as well as individuals, we have different characteristics and different behavior. There's a stage that is the accumulation stage. At that stage, you don't have any responsibility. You are just a student. You're actually depending on your parents to get income, depending on your parents to pay your get allowance from your parents. And at that stage, it's probably between the age of 17 to about 22, thereabouts, where you are still totally dependent on your parents. Although Nigeria might be a bit different, though, because Nigeria is, you find out that some 70-year-olds are already working, they're already even feeding their younger ones. When an ideal situation, say somebody is born abroad and all that. So at that stage, you need to start investing. People wait till when they start earning. Even at that stage, you're getting pocket money, you're getting allowances from uncle and aunt. You can begin to start investing. After that stage is when you now you graduated and you're now working. You do have so much responsibility. Now you're not earning your own income. You can afford to take more risk. So the first stage, which is the accumulation stage, you can take a lot of risk. At that stage, a lot of investment should be tailored towards equity investment. I know Seyi explained different kind of investment. Because you can take risk. You still have about 30, 40 years ahead of you, so you can take a lot of risk. When you now begin to move to the next stage, the name just came to my mind at the moment. But at that stage, you're already working out, already earning your income. Also at that stage as well, begin to allocate a lot of your resources to equity type investments. You don't need to lavish everything. But the next stage is now very critical, which is when you now start having kids, you are newlywed. At that stage, you have some certain level of responsibility. And at that stage, your portfolio begins to shift from maybe totally high risk. You begin to have things in terms of money markets, and some in terms of equities or real estate. But because you now have responsibility, which is called the consolidation stage. Post that is now the dissipation stage where you now you're about retiring or you're retired. You can't have too much of your investment in equity. You need to have most of your investment in capital preserving assets. She spoke a lot about capital preservation and capital appreciation. Like the case I gave was the person has retired and did a lot of risky investments. It wasn't even an investment, put a lot of risky things in the Wonder Bank and he lost everything. Let's say he had diversified his portfolio and had some in money market type investments, some in bond type of investments. He won't have suffered the sort of loss that he did suffer. So you need to understand where you are in the life cycle, and based on that, you now begin to allocate your investments from you have a lot of time horizon, you can take risk, to where you don't have a lot of time horizon, you take less risk, and begin to also focus on capital preservation and not just capital appreciation.
Oh, thank you so much. I do hope, Kosoko, you were here and you did get like the explanation to your question that is on investment life cycles. So this question I'm going to hand over to Mrs. Fiona. It's going to be like a very quick masterclass because it's long. It's from Kennedy. He says, how do you analyze Nigerian stocks to know what decisions to make about their stock? Informations are not updated compared to foreign stocks that you can see data to make decisions. Do I have to read financial statements to make decisions? Like, then he puts too tedious. Then how do you personally analyze stocks before buying? So that's why I said it's a quick masterclass.
Okay, thank you so much for that question. Yeah, so I think it was Gbolahan that mentioned that a lot of companies have research work. No, I think it was Seyi rather. A lot of companies actually have research, so they've already dissected these companies as soon as they bring out their reports. So you don't really need to be the one analyzing this company. By the time you sign up to these people, you'll see how they have analyzed the revenue growth, the potential the company has for future growth. You would have analyzed the costs that have gone into the company. They would have analyzed the returns on equity, returns on assets. They would have analyzed, the balance sheets of the company. So you don't really need to do that. You just have to rely on a good research team to help with those kind of analysis. But most importantly, you need to be able to know that you need to confirm that the companies you are investing in are companies that have potential for growth. So right now in Nigeria, what is the agenda of President Tinubu? What sectors do you think President Tinubu is going to be paying attention to? The policies that are coming out from this administration, which sectors of the economy are going to be impacted, either negatively or positively. So by the time you do a bit of work around these things, you'll be able to make decisions. Okay, this particular sector might be positively impacted by the Naira devaluation, removal of subsidy, so I will invest in it. Or it's going to impact this company negatively, so I'm going to, if I have investments in it, I'm going to leave it and I'm going to go into another company that I think has better prospects. So these are some very basic exercises that we can do in addition to relying on research work done by professionals whose job is to analyze financial. Thank you.
Thank you so much for that concise response. I do hope that you were listening in and got like clarity on that question. So we have a few more questions, and the next question would be to Mr. Okoli. I see that you already answered the other one that someone else asked here. Thank you so much. Kari he says like, what is the difference between primary treasury bill and secondary treasury bill, and how do I invest in primary treasury bills?
Can you hear me?
You're like, yes, you're back.
Okay, please take that again. I had to switch networks.
Oh, okay, thank you. Okay, so the question is, what is the difference between the primary treasury bill and the secondary treasury bill, and how do I invest in primary treasury bills?
Okay, so primary treasury bills are sold openly at open market operations. They are issued by the federal government, and clients, authorized dealers bid on behalf of their clients or for themselves. So you're buying directly from the issuer, which is the federal government. But secondary treasury bills, you're buying from holders of treasury bills. So primary treasury bill, you're buying directly from an issuer, while for secondary treasury bills, you're buying directly from already existing treasury bill holders, who want to sell to a third party and maybe exit that investment. So any capital market operator that's licensed, all three firms represented here. FBNQuest, Cordros Asset Management, and of course, United Capital PLC, all three of us. Anytime after the call, you can reach out to any of us if you want to access the treasury bills market. We're all licensed firms. Gbolahan has stressed a lot about firms that are regulated. So we're all regulated by the Securities and Exchange Commission. So you're dealing with firms that are licensed to provide that investment for you. Or you could also speak to your commercial bank. They also are authorized to provide treasury bills for their clients. So yeah.
Yeah, thank you so much for that response. So I hope you got clarity, Kaveri. I'm also going to be asking Mr. Seyi for this particular question because of where we started from the conversation. So apparently, since this person is a student, John, and he says, how can students make a good investment?
Okay. Well, yeah. It's almost the same way saying that you don't have too much money. What are the small investment that you can do with your small money? Right? There are different investments you can try out. Money market is a good one. I know I have FBN, I have Cordros, I don't have United Capital yet, right? Maybe I would try that after the call. So you can try money markets, right? And then so they allow you to start with as low as 5,000. So this is how I see it. If I want to, I do money market and all these other investments because of a goal I'm trying to achieve. So let's say I want to go into real estate. I want to have rental properties and I need about 50 million to do that. I don't have that 50 million. I need to get a bucket that can allow me to save over a long period of time so that I can have that money and then I can use it. For you as a student, you can say, I want to own my business after school, right? to own my business after school, I need like an investment capital of 10 million naira. What can I start putting aside now that I'm in school from every side hustle? So because you don't have an income, right? You don't need to put a structure around, do you have side hustle? Are there times that you make quick money and you can quickly dump 50% of the profit that you make from that deal into that investment bucket? So that flexibility is very important for you, because you don't have, if it's someone that has a regular income, you can say, okay, what percentage of your income should go into investment? You don't have the luxury of that, right? From every money you make, I presume that monies that maybe your parents give you, your uncles give you, and maybe you do a side job as a student, the money you make, you can set a pattern or a structure around it that you're going to put 50% of it into this kind of investment. Equities is also a good one for you as well, because you have time. You still have a long way to go. And like the panelists have said, or they have agreed, is that time is really very important. Where investment is concerned, the most important factor is time. Someone even showed us in one of the trainings I attended yesterday, showed us an analysis of someone who started early, started putting 10,000 naira monthly aside and has done it for 25 years. And the other person that started 10 years later and started putting 25,000, the person who started with 10,000 naira had more money because of compound interest than the person that started with 25,000. And that's the power of, you have time. You can start now. Thank you.
Hi, John. I hope you listened to this response that Mr. Seyi just gave, because he actually now pointed out on compound interest and consistency. So I hope that you pick this up. And 2 questions I think needs to be answered right now. So anonymous attendee has been very active. So let's take your question. It says, is it possible to get an investment manager to diversify my portfolio? So I'd love Mr. Okoli to answer this. Is it possible to get an investment manager to diversify my portfolio?
Yeah, and the simple answer is yes. Yes, and it's even recommended that you get an investment manager, a trusted investment manager, a licensed investment manager. For example, maybe I'll speak to United Capital now. Yes, it's what we do at United Capital, and so does every other professional represented here. So it's advisable you get an investment manager. That way, you'll be getting access to professional information. You'll be getting access to real-time advisory on the risks involved with different asset classes, what your investment horizon is. They will walk you through what your tolerance and capacity for risk is, and the risk inherent in every asset class, such that your investment goals, are prioritized, and to ensure that most times in finance, especially at the early stages, especially when it comes to diversification, because that's where it gets tricky. Many times individuals, maybe depending on where they start their financial education, often have enough information about a particular asset class, they get better at it. But when it comes to diversification, what works, for example, with equities investment may not necessarily be the best when you want to start adding bonds, adding real estate. All of that can impact your portfolio and even the time horizon you have towards achieving a particular goal. So an certified investment manager is best to walk you through so that you understand the risks involved, and they can curate, the ideal asset classes that you should be looking at towards achieving a particular goal. And it doesn't get as simple as an investment manager. There's so many elements in investment management. There's trusteeship, there's investment management for transgenerational wealth, there's investment management for having a family office, there's investment management for capital preservation, such that even anticipated changes in inflation globally, you are still able to maintain a certain standard of living. There's investment management for even entrepreneurs who own businesses, such that they're able to diversify their income stream beyond their primary operations. if you have idle cash, lying fallow, there are instruments where that can also generate a return that would also ease the pressure of operating a business. So yes, investment management is ideal for any professional, regardless of how experienced you are. Even we as professionals, we also like to network, because that way we improve on the existing skill set, existing knowledge, also abreast of trends, such that we are still ensuring we are creating the best for our institutions and for the clients that we manage. So the simple answer is yes, you should get an investment manager who will walk you through your investment goals and understand your time horizon and appetite for risk.
Yeah, thank you so much. I do hope we got clarity, Anonymous. So we have one other question from Collins, and this is directed at Mrs. Fiona. It says, please, how can I know the assets to buy for active investment? What are the areas to look at? Yes. So how can I know the assets to buy for active investment, and what are the areas to look at?
Okay. I think Mr. Okoli has captured it adequately. You need to speak to your professional. Your professional is going to analyze your appetite, your risk, the time horizon you want to make this investment, and guide you right. So, like you said, all of us here, FBNQuest, Cordros, United Capital, are all professionals in this business. So you can reach out and then we can analyze. It's not one size fits all. So giving you an advice here, somebody else might take it and then it might be to their detriment. So I'd rather say, speak to a professional, have a one-on-one conversation, and you'll be better off. Thank you.
Thank you so much for that response. So I want to say thank you to everyone that dropped a question in the comment box. Please do also check, because some of your answers are in your comments. Some questions have been answered via comment. So you want to check that. And now, I want to really appreciate each and every one. Valuable time is not, I don't think we can actually pay back for the time investing, but you took out time to spend, Mr. Ben, for Trove. I want to confirm that you're here with me before I hand over. All right. Okay. I think he's here. Okay, yeah, beautiful.
Okay, can you hear me now?
Yes, we can.
Sorry, I didn't get feedback.
Yes, we can hear you.
Fantastic. Thank you so much. And thank you, everyone. Thank you to our wonderful speakers. Really do appreciate your time. Thank you to everyone who has made our time, even in this Independence holiday. We are we have done well to spend Independence Day brilliantly. Just some very few announcements. I would like to say that it's important that when we come for webinars like this or online events, we don't just hear all that we have. I'm very excited with the chat, the questions, and the question button has been really engaging, and that's brilliant. But most importantly, is to take action. On all that we have heard today, so that we can really get the best out of it. So at Trove Finance, of course, some of us might not know, but Trove Finance is the first micro investing platform in Nigeria, and for almost 5 years now, we've been our goal and vision has remained the same: to build products that help the average Nigerian and African partake in the investment markets and earn higher returns. That's been our goal, and we've been, helping as many people as we can so far. So basically, everyone on the call, I saw some questions in the Q&A, people asking, I don't have knowledge about investing, how do I begin? Where do I get information from? But before I go into some 3 suggestions that I have or that I put down, I also just want to say that for people who are asking questions of how do I begin, you can begin with as little as $10. More like what some of I think if not all the panelists mentioned, or some of them, so Trove, once you download the Trove Finance app, you can start investing with as little as $10 or 1,000 naira in the local stock market, or $10 in the foreign stock market. So basically, for people who are having challenges with maybe they are beginners in investing, there are three things that we have done to really attend to that challenge. Number one, last year when we launched Trove 2.0. So Trove University basically gives you every information you need, helps you build capacity, helps you build expertise and knowledge in the stock market. So from being a beginner, in very few time, you can become someone who's knowledgeable, about investing in the stock market. I even begin to, maybe be an advocate, of the platform. We have a couple of people who do that for the brand, and yeah, it's been pretty interesting. Then number two, we also have our weekly newsletter, which we call Tommy from Trove. It's a newsletter that enables you, like we send, a weekly update to your mailbox directly, and updates, from globally and locally. I think someone was mentioning the fact that the way to really know how the type of stock to invest in is to follow the news, and follow the updates, as this company, the performance of the company. And fortunately, we also have a feature on the Trove app, which we call Market Insight. So Market Insight, basically, more like what Seyi was saying, it gives you insights, as it is called, into the financial performance of companies. So before you invest, that information will pop up and will give you all the guide that you need. It's on the Trove app, and you can get that once you download the Trove app. And finally, you can also check our social media platforms. We send very, very interesting and educative content daily. And if you love bite-sized video, you can also check our YouTube channel. So I just mentioned 3 ways to really start investing. So you should not have any reason to not start taking an action after today, which is number 1, Trove University platform, number 2, our weekly newsletters, and number 3, our social media platform or our YouTube channel. And also recently we launched the end feature. The end feature is our fixed income feature, which basically gives you prorated returns, because like I saw in the comments, I saw that a lot of people, I think Gbolahan was mentioning the place of risk in investment, which is very true, But there are some of us that really, maybe we don't have that, not going to that level where we can really, I would advise, number 1, I would say that we have a demo feature on the Trove app for beginners, people to $10,000 and 1 million naira free for you to play around, buy stocks, and monitor how they grow. So maybe in 1, 2, 3 months, depends on how you can, how you can really be confident. You can now decide to switch to the live platform. So that's on the Trove app. We call it the demo feature, and that's really helped a lot of beginners, for students, for people who are just starting out, to make their decisions and be confident in investing. And number 2, you can also explore the end feature, which I mentioned, right? It's a fixed income feature. It's you can start invest. You can start you can put funds that you are not actively using, and 3 months, 6 months, 9 months, and get prorated returns, right? But for more information, like I said, because of time, I'm trying to rush, you can always check our social media platforms or send us a DM on Instagram, and we will be happy to also attend to you or give you all the details that you want. Finally, I'll just mention we have a couple of exciting features, right? But I'll just mention some few that I think that will really help a lot of people on the call. Then you can also, like I said, go to our social media platform. I always like to say, recently we had a Twitter space where we talked about a very interesting topic like we are looking at today. And I also mentioned that, the festive season is coming, and one thing that we always like to advise is it's great to buy gifts, the season of buying gifts, and you're thinking, what do I, even at your workplace, you want to maybe give a gift to a coworker or a senior colleague, or, whoever, you can always give a gift that keeps giving, right? The Trove app has a feature called Trove stock gifting feature, right? Where you can gift your friend, your loved ones, your co-worker, whoever, stocks, and they will always be happy because it would continue to appreciate, and they will be delighted that you did that. Rather than just buy maybe an iPhone 15, you can buy an Apple stock for that person, right? Yeah, so I think I will stop here because of time. Like I said, there are so many great and useful features on the Trove app. I won't be able to mention all. I really doubt that there's something you are looking for that you won't find on the Trove app, and I'm being honest with what I just said. But if you're still, maybe you need more information, feel free to go to our social media channels, and send us a question, and we will definitely answer. Maybe something from this session also. We'll be happy to attend to that. Thank you so much. Thank you to all our wonderful speakers. Thank you for your time. Thank you for spending time with us. Thank you to all the audience. Thank you again to our amazing host, your personal finance girl, Oluchukwu. You have been fantastic today. Thank you for making our time. I think I will hand over to you to maybe take some closing remarks, or you want to maybe, share some other information. Thank you, guys, and really looking forward to having everyone use the hashtags and talk about this webinar on social media. And yeah, we are always here to help you achieve your financial goals.
All right, thank you so much for that very brief message for us all. I remember someone mentioned, they needed to get more information. So if you need more information, just go on Show Finance Instagram or Twitter, and you're going to get all the questions that you've been asking. Yeah. I would also like to hear from our speakers. Would you like to give us some final words for today? What do you want to leave us with? Should I start with Seyi? Please, can you give us some final words?
Well, I think everything has already been said. The only thing is take actions on all the things you've heard, because the most important thing is action, so that in 1, 2 years, 3 years down the line, when you think about today, you can say, oh, this is the day that my life changed. Please take action. Thank you.
Yeah, thank you so much. Over to you, Mr. Okoli.
Okay, the best time to invest was yesterday. The next best time is now. So invest now.
Yeah, spot on. Okay, over to you, Mr. Gbolahan.
Okay, I'll leave the quote by Warren Buffett, and it says that you don't have to be wealthy to invest, but you have to invest to be wealthy.
Oh, beautiful. Okay, so over to you, Mrs. Fiona. I don't know if you're still with us.
Yes, I'm still here. Okay, so I'd say, in addition to everything my colleagues have said, build knowledge. Nobody will do these things for you. You need to be able to do this yourself. You need to take charge of your financial freedom and work towards it. Thank you.
Okay, thank you so much. I would be so grateful. I'm so grateful. Thank you all so much for spending time with us. To everyone that has been here from the beginning up until now, thank you for your time. And like Benedict have mentioned, please don't hesitate to leave your thoughts on your social media, on your what's it called, on your Instagram, on your LinkedIn, about what you picked up from today. We'll be very happy to read from you about today's session. And just like Mr. Seyi has said, we want to see that it's pumped. You can actually look back 10 years from now and say, yes, there was a turning point about me building wealth, about me investing from this particular session, from the Multipliers conference, and we're going to see you next time in the next edition, or when we're having another event at Trove. We just want to see you. Thank you so much, and have a very beautiful, wonderful afternoon. Okay, so I have one more announcement. Hold on, please. One more thing to add to all of that. Let me get it quickly. Okay, yes. For those of you that have been asking about the recording, especially for those that did not join in on time, it will be on YouTube. So from this evening, you can, or tomorrow, you can actually just check on the Trove Finance YouTube page, and you're going to get the whole session live on YouTube. So don't worry if you feel like you missed a bit, but everything is going to be on YouTube. So you can always catch the recording there. So for John and every other person that asked about the recording, we're going to see you. You can grab that on YouTube. So thank you all so much. Like I said before, have a beautiful afternoon. Over to you, Benedict. Thank you. Thank you, thank you,
Well
thank you.
done, well done.
All right, thank you, everyone. Thank you so much. Thank you. Thank you, Seyi. Thank you, Ejikeme. Thank you, Gbolahan. Thank you, Mrs. Fiona. Really appreciate everyone. Looking forward to more engagement and more conversation. I will definitely be in touch, and we'll reach out to everyone, before tomorrow. But to all our audience, thank you so much. Our social media platform is your best friend now, so you want to swift, you want to, explore that option, from here. Thank you, everyone. Have an amazing holiday, and we'll see you again next year. Bye, everyone.